How's it going, everyone? Today is January 30th, 2020, and this is Thriving Bulls Trade of the Day. Good morning or afternoon, wherever you guys are coming from. This is Thriving Bulls Trade of the Day. We are looking at a buy order for the AUDUSD, right off of a deviation level, actually. So let's go ahead and look at the chart right now. So as you can see, we are bouncing right off of a, I have a price level here, but it's the deviation in between negative 1.5 and negative 2.0. So this is basically a negative 1.75. And we basically hit it right to the tick, and now we're just kind of working our way up. Now, we have over an hour till this trade expires, about an hour and 2 minutes exactly, as you can see here. And what I can expect we will probably do is maybe come up into this area and then come back down and then, come back into here and then form this nice upward trend and then kind of fill up a little bit of this gap and then maybe work its way back down, because we have been really working our way down for quite some time with AUDUSD. We're looking for not much profit on this trade. We're actually about $10 in profit as of right now, and we could probably close the trade out if we really wanted to at this moment. We might actually do that because the trade that we actually have is right here at 6708. And so we are actually taking a really big out of the money trade here just to kind of get a nice order. So let's go ahead and go into the 1 minute chart and go back into the chart here. And I'm going to look at these side by side and then just kind of gauge it to get rid of it for the profit that we already have. So I'm going to go ahead and just kind of watch this thing and on another chart. And let's go ahead and close it for the $9 that we've got. So that was a little, just a little trade, but with the $9 it adds up because we, took it at such a small price. We took it at $26.75. So I mean, if you figure $26.75, and we had 15 positions on, so it cost us about $401, and the potential of this was 100 minus 26.75. So our potential profit was $73.25 per contract. So we risked 401 to make 1,098. So the risk to reward was very good. So we having 15 times that by 9, we're looking at $135. And of course, you want to get rid of. I'm going to take 30 off because of 15 on each end for fees. So about a little $100 winner. So we basically made a fourth of our risk back, which is again pretty good, and we literally took the trade right about here, and we got out in 1, 2, 3, 4 minutes. So just a little 4 minute trade that was pretty profitable. But it's all based off of deviations. Now you can get these every single day for only $90 a month, or if you want to get the thriving signals plus the deviations plus the auto trader for free, you can get that for $150, which is just an amazing deal. And $90 a month for deviations alone is the best you'll find all over the internet. So So if you are interested in that, you can go to our website at www.thrivingbull.com to check those out. But let me just kind of show you guys exactly how all this works. Now, let me just pull up our website and I'll show you there. All right, so right here I have a nice position of our website. That's just the How It Works page. And on the How It Works page, it'll show you exactly how our daily deviations work. And as you can see, we have a little nice picture of the graph from our actual charts right here that shows that. And it shows this nice little diagram that we made to show the deviations as well, the curve bill. And so what this shows is that you have the -1 deviation, the +1, the -2, and the +2, and the -3 and +3, which we don't put on our charts because the prices rarely ever go to that position. And then right in the middle is what we consider set. Now right here to here. From here to here is your -5 and positive point, or -0.5 and positive 0.5. Then you have your, from here to here is your -1.5 to positive 1.5. And then from here to here is where we drew, which is your -1.75 and your positive 1.75. So what we can see is a nice percentage down here. Now this percentage is what is going to show the percentage of rate where this curve will stay within this zone. So if the curve is within the zone, and we'll just say price for this presentation, you have a 68.2% chance that it will stay within this zone. If you are at the -2 to +2, then you have a 95.4% chance. Now, obviously, this goes a little further. This goes a little down once you go from the negative to positive 1.75, but it still remains that it's above 90%. So, because we have a over 90% chance, the fact that we got right at that, let me just change this so you guys don't just see it as that. So, negative 1.75. So because we know that this is our negative 1.75, we have a 90% chance that price will stay from, and let's make a nice, we can even kind of visualize it, the price being right here at negative 1.75, the price will stay within this zone. There's a 90, it's 90, let's say probably around 92.6. If I, did a little bit of math, probably would be around that. So 92.6% chance that price is going to stay within this little curve right here. All into this is where price will stay. So what that kind of means is that there's a over 90% chance that price will not go below this price and go further down. Now, if it were to go further down and go into the negative 2.0, then we could tell that it would be, what do we remember seeing on the bell curve? We remember seeing that it was a 95.4% chance. Now, we don't just take these trades based off of it just bouncing off of bouncing right off of that line. We don't, or that price. We don't want to just take it right off of that. We have other things that we want to look at. We have a nice downtrend, as we can see here, but we can see here that this is a nice uptrend. So this is showing us some nice, what we call divergence, when the volume is showing upward momentum, but the price is showing downward momentum. And so because of that, we see that as considered divergence. Now that is something that we have. And then if we go into a further chart, which is a 15, 30, hourly, however you want to look at, we can also see that we are extremely oversold. And that is another indication that we could probably go ahead and buy this trade. And something else that you could do is you could wait for what we consider a candlestick formation. You have a candlestick formation right here that is shown. Now, if you are not familiar with candlestick formations, we encourage you guys to go out and definitely learn those. They are extremely important in trading. And learn your candlestick formations. That is going to help you tremendously. And I know that hindsight's 20/20, but you can obviously always look at the past and see some amazing trading opportunities based off of candlestick formation. So if you see that the trend is downwards, you want to go towards that trend most of the time, but you obviously want to be able to kind of see where price may actually go into a place like this, where price did go up here, and then it went down, then it went up here, then it went down, then it might be going up here. So we kind of want to see that. Another thing that you can do is you can take your Fibonacci tool. You can go from that recent high all the way down to this recent low, and then kind of get a gauge and see, did price do anything around this around for these Fibonacci's? Well, we can see that price came down into this 23.6 here and acted as support. Price consolidated around that 38.2. We can see the price acted as resistance on the 50 here and acted as support on the 50 there. We have price consolidation around the 61.8 as well as support and resistance right here. And then we can see that 78.6 is acting as some nice resistance right there as well as right there. So we can see all these little zones showing that this is showing some nice potential reaction. And because of that, we can expect that price will go up into possibly that 23.6. Now, there's obviously, Fibonacci points all in between here. We just don't have them written down. We have, somewhat of the most important ones that we have always practiced with within our own Fibonacci. But we also have our negative 1.5, which is also causing us a little bit of concern when it comes to the resistance zone. And we had over an hour left for that trade to expire, and we don't want to hold the trade all because we want to get the full potential profit and wait over an hour. So I hope that you guys enjoyed this trade. It was a pretty simple one. And again, it's all based off of deviations, which you can get for only $90 a month. If you have any questions, please do not hesitate to comment in the comment section down below or visit our website at www.thrivingbull.com.